Welcome to the Xperi Holding Corporation Virtual Investor Day. Thank you for joining us. Today we'll share some exciting news about the future, information about our pending spin transaction, and the strategies, objectives, and growth plans for Adeia and Xperi Inc. as we move forward as separate companies. During our discussions today, we'll be sharing certain forward-looking information about our expectations and plans. As such, I draw your attention to the Safe Harbor statement covering our presentations. Today you'll hear from members of both Adeia and Xperi's executive management teams, led by Paul Davis, CEO of Adeia, and myself, as I continue on as the CEO of Xperi. Before diving into each individual company presentation, I want to provide an overview of Xperi as we approach separation and offer some high-level details about the transaction. This information is intended to assist you as you delve into the specifics of each business. After each of the company presentations, representatives from management will be available for a Q&A. Now let's begin. The world of semiconductors, consumer electronics, and media delivery has changed significantly over the past 30 years. Huge advancements in computer power, bandwidth, and storage have driven significant progress in the availability, quality, and personalization of media content. Silos have dissolved, and more media is being consumed anywhere, anytime, and on any device than ever before. These huge shifts have led to substantial innovation and industry consolidation. Xperi Holding Corporation is the product of a strong legacy of innovation and industry consolidation around core technologies that power the media platforms of today's entertainment delivery and higher quality experiences. Behind the legacy of innovation, Xperi has some of the industry's most well-known brands, deep and long-standing channel relationships, a wide and diverse base of business, and a breadth of world-class domain expertise that can only be assembled through decades of industry partnership. It's these core attributes and our role in well-established industry ecosystems that set the stage for innovation and growth through the next industry transition as we see the continued explosion in content consumption, the continued march toward OTT streaming and AVOD services, and a future that will be defined by ever more advanced semiconductors and AI. The collection of IP, assets, know-how, domain expertise, and industry credibility within Xperi is highly unique and creates significant strategic advantage. It's our intent to carry that forward within each of our IP and products and services businesses. Our objective is to enhance long-term shareholder value through separation, creating two pure-play focused companies. This will reduce operational and strategic complexity, sharpen management focus, simplify capital allocation decisions, and improve talent acquisition and retention. Adeia will focus on continuing to grow one of the world's largest independent licensing platforms in the media and semiconductor space, by innovating and growing its patent base and aggressively licensing its portfolio of over 9,500 patent assets. Adeia is very profitable and has long-term licenses that generate significant recurring cash flow. Xperi will continue to create software and services that deliver extraordinary experiences, and in particular focus on growing its independent media platform business, riding the advanced technology curve in automotive infotainment and safety, and creating disruption in the AI space through edge-based computing. All are big growth opportunities, and today we approach them with sizable scale and footprint, with a business serving up 16 billion discovery queries every quarter, powering 30 million video households, and licensing 90 million cars and billions of consumer devices. With that as background, let's talk about separation details. The management teams of Adeia and Xperi are in place. Boards have been identified, and separation agreements have been finalized between the businesses. Currently, we're effectively operating independently. All remaining administrative items necessary for separation will finalize by the end of September. The transaction details are as follows. The product business is being spun off and will continue to utilize the Xperi name. Shares will be distributed on a tax-free basis, with shareholders receiving 4 shares of Xperi SpinCo common stock for every 10 shares they hold as of the record date.
Currently,
We expect Xperi to spin with $175 to $200 million in cash and $50 million in debt incurred in the recent Viewed acquisition. The remaining IP business will be renamed Adeia and will keep $75 to $100 million in cash and the remaining outstanding Term Loan B balance of approximately $760 million. Adeia's executive team will be led by Paul Davis, CEO, and Keith Jones, CFO. I, along with the rest of the current leadership team, will continue with Xperi Inc. after separation. The realization of this strategic milestone is the result of years of effort to transform and better position two larger businesses for independence, to better capture growth in the next industry transition and unlock meaningful shareholder value. Let's now turn to the specific company presentations.
Hello, everyone, and thank you for joining us. My name is Jill Koval, and it is my pleasure to welcome you to Adeia's first ever virtual 2022 Investor Day. We have an exciting agenda. In a moment, you'll hear from Paul Davis, President and Chief Executive Officer of Adeia, who will provide a strategic overview of Adeia as a new standalone entity. Paul will highlight the key pillars that underpin the strength of Adeia's licensing model and its growth strategy, including updates about the IP portfolio and drivers of past and future success. Following Paul, you'll hear from Dr. Mark Kochs, Chief Licensing Officer and GM of Media. Mark will discuss the pervasiveness of video adoption and how Adeia intends to capture this opportunity, given both the strength of the media patent portfolio and the robust underlying growth of its innovations. Dana Escobar, Chief Licensing Officer and GM of Semiconductor, will discuss how Adeia intends to be an essential partner to the semiconductor industry and capitalize on its leading hybrid bonding and advanced processing node technologies. Keith Jones, Adeia's Chief Financial Officer, will discuss Adeia's financial value proposition, financial position at separation, long-term financial model, and its capital allocation and growth strategies, and how it all comes together in Adeia's long-range plan. At the end of our speaker presentations, we will have a live question and answer session. All of the materials presented today will be available on the Adeia website shortly following the event. And now, let's get started. It is my pleasure to introduce you to Adeia.
Everything we do starts with a great idea that we turn into an innovation that shapes the way billions of people consume entertainment. From how they explore it, to how they experience it, to how we enhance it, and the billions of consumer devices in an increasingly connected world. Adeia broadly licenses our patented technologies to advance entertainment everywhere. Yes, our name may be new, but our roots run deep with decades of continued innovation. And while we are proud of where we have been, we are even more proud of where we are going. It all starts with ideas, and that's why ideas will always be at the heart of Adeia.
Good morning and welcome everyone. I am Paul Davis, President and CEO of Adeia. I am thrilled to have the opportunity to introduce Adeia as a new standalone entity with a compelling and viable business model, which leverages our strong business fundamentals to generate enhanced financial performance in the near and long term. Adeia's IP licensing platform provides access to innovations which allow our customers, which include many of the largest media, entertainment, consumer electronics, and semiconductor companies, to create their own best technology solutions and products. It all starts with great ideas. Our internal engineers and inventors have a singular focus: innovate in our target markets to create the most advanced, revolutionary, and forward-thinking solutions to the problems facing media and semiconductor companies. Our internal innovation engines for media and semi generate approximately 85% of our current overall patent portfolio. Following separation, we will accelerate our internal innovation as we continue to further grow the size and relevance of our patent portfolios to enable and enhance next-generation shifts in technology and fuel the growth of our business. At Adeia, we are extremely fortunate to have a world-class team of licensing executives, industry leaders, engineers, and inventors who have exceptional track records and will drive our continued success. Let me introduce the Adeia leaders you will be hearing from today. Dr. Mark Kochs, Adeia's Chief Licensing Officer and GM of our media business, joined the company approximately 1 year ago. Mark has led 3 IP licensing organizations and has been instrumental in acquisition and IP licensing strategies. Mark is frequently commended by industry press as one of the most influential IP professionals in the world. Dana Escobar, Adeia's Chief Licensing Officer and GM of our semiconductor business, is a proven leader with over 25 years of experience in IP licensing. Dana has experience in all phases of IP licensing and monetization and has led numerous IP licensing programs. Dana joined the company almost 2 years ago after an impressive career at leading semiconductor and technology companies, including LSI Corporation, now Broadcom, Sharp, and GE. Keith Jones, Adeia's Chief Financial Officer, recently joined Adeia from Rambus, where he served in several key finance roles since 2018, and most recently as interim CFO. Prior to joining Rambus, Keith served as the Worldwide Corporate Controller, Vice President of Finance, and Principal Accounting Officer at ShoreTel. In addition, he served as CFO and Vice President of Finance at PDF Solutions, and has also held senior leadership roles at other technology companies. You will also hear from our CTO of Media, Serhad Dokan, and our Vice President of 3D Portfolio and Technologies, Laura Mikarimi, as they discuss innovation at Adeia. At Adeia, our focus is on innovation first. Approximately 85% of our portfolio is organically developed. We have world-class engineers whose primary goal is to invent the next great idea. Our engineers and inventors are able to focus on what is coming next in media and semiconductor technologies. They then work with our talented attorneys to convert those ideas into a powerful patent portfolio that covers fundamental aspects of the industries we cover. Adeia's diverse IP portfolio, at over 9,500 patent assets, has been a key contributor in our ability to renew and complete new license agreements with world-leading media, entertainment, consumer electronics, social media, and semiconductor companies. Adeia's media portfolio covers fundamental aspects of the video experience across platforms, including how consumers search, record, stream, discover, and watch entertainment. As video continues to expand into all aspects of our life, we are well positioned to benefit from this meta trend. You will hear more from Mark on this trend and how we plan to participate in it later on. Our semiconductor portfolio development is focused on hybrid bonding and advanced processing nodes. We believe our industry-leading hybrid bonding portfolio, which we refer to as Direct Bond Interconnect, or DBI, is a transformative and generational platform. Further, our advanced processing node portfolio covers fundamental aspects of semiconductor manufacturing, especially as the industry moves to smaller and smaller nodes. Dana will discuss these exciting opportunities for Adeia in more detail shortly. Our history and focus on innovation and portfolio development is widely recognized by the industries we serve. We succeed as a result of our leading patent portfolios and through our understanding of our customers' needs in building long-term relationships. Our goal is always to reach market-based license agreements with all of our customers through deep technical and business engagements that demonstrate the value of our portfolios. The benefits of this approach are proven out with long-term license agreements and our ability to repeatedly renew and expand relationships, which we believe benefit both us and our customers. This successful licensing model leads to best-in-class financial results with EBITDA margins in the mid-60s. This profitability will allow us to continue to invest for growth as we look to expand our patent portfolios through internal R&D and strategic acquisitions, as well as pay down debt and return capital to shareholders. Our near-term strategy is to extend our annual baseline revenue by securing new and expanded license deals in new media, such as additional OTT and social media companies, the unlicensed Canadian pay TV operators, and continuing to rebuild our semiconductor business. We will also look to continue to grow our patent portfolios. One of the primary benefits of the separation for Adeia is that we will be able to better focus our investments on our core business. To that end, we intend to grow the key asset in our business, our patent portfolios. We have set an aggressive goal to grow our portfolio 10% year over year, and will focus this growth not only on media and semiconductors, but also adjacent markets. This investment in new technologies will pay long-term dividends as our customer base expands and existing customers continue to value our ever-growing portfolio. As we expand our patent portfolios, we will look to drive market adoption of these technologies through thought leadership, marketing, and collaboration with industry-leading companies. By accelerating market adoption of our innovations, we will position ourselves to further increase our annual baseline revenue as we execute new, improved, and expanded license agreements with our customers. Our fundamental innovations shape the way millions of people explore and experience entertainment and enhance billions of devices in an increasingly connected world. From TVs to smartphones, regardless of location, from home to work to on the go, and in all types of entertainment experiences. From pay TV to OTT to social media and to the metaverse, managing content and connections in the way that is smart, immersive, and personal is precisely what our innovations do. Our innovations broadly cover all aspects of the entertainment experience. These include, among others, guidance, discovery, search, personalization, advertising, imaging, and content storage. Adeia licenses its patented media innovations for use with traditional linear television, both in North America and internationally, and increasingly in connection with OTT, direct-to-consumer, and social media services that provide access to entertainment inside and outside the home and on a broad array of devices. We believe the continued growth of video consumption, the evolution of how consumers explore and experience video, and the need for content storage on high-performance computing present opportunities for us to continue to develop patentable innovations and expand the industries we serve. This ever-expanding growth of video consumption also drives the need for advanced high-performing semiconductors. As the boundaries of Moore's Law continue to be pushed, Adeia's semiconductor business is focused on technologies that will enable the industry to continue to enhance performance that power the devices that we use to watch and enjoy entertainment. Adeia licenses its patented semiconductor innovations to leading semiconductor companies and partners with the industry to accelerate the adoption of these technologies. Over the past 20 years, our combined licensing business has generated over $9 billion in revenue, and we have built an impressive annual revenue baseline of $375 million, driven by long-term contracts and a history of successful renewals. We will continue to grow this baseline through strategic investments and expanded opportunities as a result of being a standalone IP licensing company. We will also be able to pursue opportunities in new media that were previously not available as a combined company. Building off this strong baseline and our best-in-class EBITDA margins, we will look to increase the size and scope of our licensing model. We are well positioned to do this because we have the right team, the right process, the right markets, and the right assets. Our licensing professionals have an incredible track record of building and expanding licensing programs. Collectively, they have led licensing programs that have generated billions of dollars of revenue. At Adeia, we have also developed world-class processes, from innovation to patent portfolio management to customer engagements. We excel at the nuts and bolts of IP licensing. We also target large and profitable markets to license our technologies. We have a deep understanding of the ecosystems in which we play and how to approach those opportunities to maximize value. Lastly, our portfolio of patented technologies in media and semiconductors is widely recognized for its breadth, quality, and strength. Our current assets, combined with our planned portfolio growth, will drive our future success and expansion of our leading licensing platform. Putting it all together, we are well positioned to capitalize on our best-in-class financial performance, with a strong baseline revenue supported by stable recurring revenue and long-term contracts, near-term growth opportunities in new media, semiconductors, and Canada, and long-term expansion into adjacent markets. Importantly, you can measure our progress through the following key metrics that we will update you over time. 1. Increasing our annual baseline revenue to over $500 million in the next 5 years. 2. Growing our patent portfolio at least 10% year over year, principally through organic R&D. 3. Expanding the number and scope of new media and semiconductor license agreements. 4. Growing the portfolio applicability and executing new license agreements in adjacent markets, including gaming, automotive, advertising, e-commerce, and streaming audio. We look forward to updating you on our progress towards achieving these goals. Before we dive into more detail on the media and semiconductor businesses, let's first hear from two people that drive our innovation engines, Serhat Doken and Laura Mercarini.
Adeia has deep roots in two different markets, media and the semiconductor business, and I focus on the media side. Adeia's media roots go back 40 years to the onset of the media industry.
I focus on Adeia's semiconductor research and development, which has a rich history about 3 decades long of bringing innovation to the semiconductor market. One example is chip-scale packaging. In our semiconductor business, we focus on inventing solutions that will enable the next generation of product enhancement for our licensees, such as a smaller, faster, denser interconnect for enhanced computation, data transfer rates, and thermal performance.
I have worked at both traditional product-focused companies and other research-focused companies like Adeia. At a product-focused company, you're working on a short-term cycle, maybe the next 3 to 9 months. You're just trying to get a product out to market, make it work as quickly as possible. Here at Adeia, we take a broad and deep approach. We're trying to come up with what's going to impact not just a single product, but the entire industry by inventing solutions to industry's tough problems and thus unleashing new products and services. You have to look at it with an eye towards the future, and that's what's very appealing to me.
One of the areas we've been working on is a new technology that's so exciting because it's a platform technology. Our hybrid bonding, or to be more specific, our direct bond interconnect allows product-based semiconductor companies to innovate their product roadmaps for generations to come. The technology has been adopted by various segments of the semiconductor industry, including image sensors, memory, and high-performance compute applications. We see this trend continuing into new segments such as displays, RF modules, and artificial intelligence modules. Our innovation story begins by assembling many creative experts from a variety of specialties that come together to think beyond today's semiconductor devices. Then we create prototypes in the lab to realize our novel concepts. We test to the industry standards, and we publish that data to share the value and performance of the fundamental technology. We continue to develop our innovation roadmap by repeating this process. We develop know-how and share that with our licensees through technology transfer programs. We're an extension of our customers' R&D team. We worked with several of the top 10 semiconductor companies in the world who initiated a license and technology transfer after a functional demonstration program. With our hybrid bonding technology, we are working toward a holy grail of advanced packaging, bringing in an era of ubiquitous, heterogeneous integration.
We put our inventions out to the public through papers, presentations, blogs, open source code, and our patents. Everybody can read and learn from them. The exciting thing is that our recent innovations in augmented reality will help merge the physical world with the digital world, seamlessly mixing the virtual and physical objects. I think a big seismic shift is happening right now. It's not visible to general public, but the infrastructure is getting built, and in a couple of years, devices using our inventions will have a significant impact on how we communicate, how we advertise, how we game, impacting the entire media industry. At Adeia, we're working to shape the way millions of people explore and experience entertainment and enhance billions of devices in an increasingly connected world.
Hello, my name is Dr. Mark Cokes, and I'm excited to be here. Today, I will speak with you about the strength of the Adeia Media patent portfolio and the robust underlying growth of its innovations. Adeia's success in the media vertical is a direct consequence of its fundamental IP as it relates to the proliferation of video technology and the subsequent pervasiveness of video in the modern world. This success is a testament to the strength and breadth of the Adeia Media portfolio and its applicability to solving problems faced by the greater media industry and adjacent industries benefiting from this megatrend. The increasing importance of video to a broader set of products, services, and applications, as well as a broadening set of consumer electronic devices integrating video technology, continues to drive adoption of Adeia's intellectual property portfolio, which will continue to grow and benefit from this technology trend well into the future. This year alone, online videos are expected to make up more than 80% of all consumer internet traffic, 15 times higher than in just 2017. 78% of people watch online videos every week, and more than 55% view online videos every day. In fact, it's estimated that 1/3 of all online activity is spent watching video. Video continues to find its way into adjacent verticals for the benefit of advertising, personal security, healthcare, education, and many more applications. For the past decade, Adeia has delivered a growing annuity stream as a result of the way the media sector continues to evolve. Essentially, Adeia is being pulled with that evolution as those companies comprising the sector choose to build their technology on a stack of fundamental IP that Adeia solely owns. Adeia innovations fundamentally change and expand the ways in which consumers experience video, both traditionally as well as in a fully immersive setting. From early recording technologies on VCRs to the first DVR launched by TiVo, or to the latest cloud-based solutions accessible from any device, Adeia provides consumers with the intellectual property necessary to enable their freedom to watch video at any time, on any device, in any location. With the proliferation of devices, content choices, and entertainment experiences across the live, recorded, time-shifted, on-demand, and online video, and into immersive video experiences, Adeia is well positioned to continue its ongoing innovation and licensing efforts in this area. Today, we already are a technology and IP provider to the metaverse through our video and social media IP assets. With billions of dollars continuing to be invested in this vertical, Adeia expects to continue to benefit from licensing into this emerging technology trend. Adeia has a long history of innovation across a diverse set of applications, all culminating in the aggregation of an IP portfolio that was specifically designed to meet the evolving needs of consumers. Adeia engineers solved real-world problems and built a substantial business, enabling others to do so within their own products and services. We're excited at the value we can unlock by being an independent company. Adeia's fundamental innovations shape the way millions of people explore and experience entertainment and enhance billions of devices in an increasingly connected world. From TVs to smartphones, any place from home to work and on the go, and in all types of entertainment experiences from pay TV to OTT, helping the consumer manage content and connections in a way that is smart, immersive, and personal is precisely what our innovations do. Adeia represents the aggregation of numerous media brands from the global marketplace, each offering a fundamental set of technologies and solutions to the markets we serve. Our patented innovations broadly cover all aspects of the entertainment experience, including search and discovery of content, playback of on-demand video across multiple screens, personalization of video content, face identification and feature tracking, and numerous other relevant video and imaging use cases implemented around the world. Adeia's IP is essential in enabling an individual to personalize her media experiences. This is a testament to the fact that many of Adeia's solutions have become ubiquitous across the industry. Here we provide an overview of a few of the key technologies and innovations of the media business and provide investors a window into the origins of our innovations. From the original TV Guide magazine in the 1950s to the introduction of on-screen electronic and interactive program guides, Adeia created the interface for television viewing. Adeia has continued to deliver innovative, award-winning ideas that help consumers navigate an increasingly complex universe of content. Finding content remains an important part of the entertainment experience. Adeia believes new discovery experiences integrating advanced personalization specific to a person or a device and new forms of interaction such as voice will continue to be an area of ongoing innovation and new and improved entertainment offerings. Adeia innovations are at the center of how consumers explore what they want to watch and are a critical part of the user experience. Adeia leads innovation in content discovery, including universal search that spans live, recorded, on-demand, and streaming content sources, personalized discovery that enables a wide variety of experiences, including recommendations as well as predictive results of popular and trending content, and conversational interfaces, which interpret voice commands and requests and support natural conversational dialogue and interaction with smart responses. Adeia innovations also include providing consumers the freedom to watch immersive video. This includes multi-device experiences, like when you start watching your favorite show on one device and then seamlessly transition to another device while on the go. Adeia innovations also allow for immersive entertainment experiences that are more engaging and gratifying than ever before, with dynamic advertising, gaming opportunities, wagering, and shoppable video seamlessly integrated into the content. Adeia's media IP business has a phenomenal backstory, one truly unique to our brand and across our industry. Adeia licenses its patented media innovations for use with traditional linear television both in North America and internationally, and increasingly in connection with OTT, direct-to-consumer, and social media services that provide access to entertainment inside and outside the home on a broad array of devices. In our core markets, Adeia enjoys a stable base of long-term agreements with an average term of over 5 years and a strong track record of timely renewals. So we're not reliant on greenfield licensing programs to maintain our baseline revenue, but rather mature, steady-state programs that derive from many repeat name brand licensees across easily identifiable patented technologies that have been validated with set royalty rates. Adeia's existing customers include multi-channel video programming distributors. These include cable, satellite, and telecommunications TV providers that aggregate and distribute linear content over their own networks, as well as TV providers that aggregate and stream linear content over broadband networks. OTT video service providers, social media, and other new media companies. These include service providers that offer online services and devices which enable internet streaming and downloading of content directly to consumers through a variety of business models, and social media companies that increasingly rely on and incorporate video as an integral part of their offerings. Consumer electronics manufacturers. These include producers of content access points such as smart TVs, streaming media devices, video game consoles, mobile devices, DVRs, and other connected media devices. We believe in the continued growth of video consumption, the evolution of how consumers explore and experience video, and the need for content storage and trusted distributed computing, all of which present new opportunities for us to develop patentable innovations and expand the industries we serve. Moreover, due to the proliferation of video-related technologies into adjacent verticals, corporate and consumer interests have grown to include an expanding set of use cases that are framed by Adeia's intellectual property. These include the synchronization of real-time video content to a mobile device for sports betting, altering of consumer behaviors via targeted video advertisements, broadband distribution of long and short-form video for automotive and security applications, and both improved and scalable video quality for conducting electronic commerce across a range of devices. Adeia is in a unique position to capitalize on its existing portfolio of assets and introduce additional programs in these new market verticals to bring its innovative solutions and related IP to those markets through greenfield monetization programs. Adeia's superb tactical team and operational IP allows us to efficiently mine for and originate high-quality greenfield programs. The IP ecosystem remains dynamic, and Adeia's unique expertise and scale positions us to pursue inorganic opportunities where we can unlock value in existing portfolios. The ongoing global realignment of IP assets could provide a strategic opportunity for Adeia to create additional revenue streams on top of our industry-leading monetization efforts. Adeia is a leading global IP licensing business with improved visibility, customer diversification, and scale. We expect to drive growth on the media side of the business by 1, extending the adoption of Adeia's innovations and licensing of its intellectual property across the broader entertainment industry and adjacent markets such as audio streaming, automotive, advertising, and gaming. 2, growing our patent portfolio in size and relevance through ongoing investments that are principally focused on internal innovation, targeted acquisitions, and strategic portfolio management. And 3, utilizing our diversified IP portfolio to drive new and improved agreements with leading entertainment, consumer electronics, and social media companies. This growth will be supported by the 3 central pillars on which the Adeia Media business is built. Our markets are vast, and third parties continue to adopt our technologies. Our management team, platform, and data set are unique and specifically tailored to monetize the assets that we own. And we have a large supply of technology and targeted IP that are relevant to our skill set, which we believe we can acquire at good value going forward to continue to feed our machine. Adeia has a proven, large, growing market opportunity and platform with a unique team whose industry knowledge and expertise is able to efficiently manage and monetize its portfolio. The Adeia Media IP portfolio numbers 6,800 plus patents and applications and has a good mix of both issued patents and IP assets in development to support our ongoing media licensing business. The age of the portfolio is holding steady with an average of 10 years of active life per asset. Few organizations have a true understanding of the depth of their IP assets, the historical record behind their patents and applications, as well as an understanding of their IP's importance to the market, true insight into how and where their IP is used and deployed. There exists only a small group of companies worldwide that can understand this insight and value, not to mention having an expert team, a unique data set, and operational processes to capitalize on the assets they own. Adeia's expertise strategically positions the company to pursue additional markets and continue its growth trajectory. Adeia and its IP peers play a critical role in the global media technology ecosystem, one that allows transfer pricing between inventors and their inventions and developers and their users. Adeia is a well-organized and well-understood essential component of that ecosystem. Now I'd like to turn the presentation over to my colleague Dana Escobar to provide you with an insight into Adeia's semiconductor IP.
Thank you, Mark. It's my pleasure to speak with you about our semiconductor business. Our goal is very straightforward. We work every day to be the industry's essential partner. We do this by taking on the tough technical challenges, solving them, and then sharing our solutions with our partners. We have a long history that goes back for decades. For most of that time, we focused on advanced packaging technology. However, we began to realize that one of the fundamental problems facing our industry is that Moore's Law, which states that the number of transistors in an integrated circuit doubles every 2 years, is reaching its theoretical limits. And if we wanted to continue to provide value to our partners and shareholders, then we had to turn our direction toward solutions that address that problem. So while more traditional advanced packaging will continue to be part of our DNA, we're now focused on promoting two emerging technologies which deal with the Moore's Law issue: hybrid bonding and advanced processing nodes. For today's discussion, I will define hybrid bonding as a permanent bond that combines a dielectric bond with an embedded metal to form interconnections. It's important because the solution to the Moore's Law problem is to stack vertically, and the only technology which stacks at the required pitch is hybrid bonding. Our version is known as direct bond interconnect, or DBI. We believe this is a generational technology and are widely acknowledged as a leader in this field. Turning to advanced processing nodes. First off, what is it? Simply put, semiconductor chips are often discussed in terms of nanometers. Traditionally, nanometers refer to the size of the transistors contained in each chip. So the smaller the transistors, the more you can put in and the more powerful it can become. Today, nanometer size refers to different process nodes and doesn't strictly denote transistor size, but rather improvements in the manufacturing process. Given the performance advantages, the industry is moving towards smaller nodes, and we're beginning to see products in the 7 and 5 nanometer range, and expect them to get down to 2 and 3 nanometers in the near future. As they continue to get smaller, we believe that our patented processes will only increase in importance. As you can see, our pending patent applications reflect the emphasis we are placing on both hybrid bonding and advanced processing node technologies. We anticipate that our portfolio will continue to grow and evolve in both areas through continued internal innovation and through strategic acquisitions. But we are much more than patents. We are also a technology incubator, and our hybrid bonding journey is a major success story. It began in 2015 with the acquisition of a company known as Ziptronics, which was an early pioneer in hybrid bonding. We took this technology to the next level by improving and refining the bonding process, enabling the supply chain, expanding our process offerings, marketing our technology at various technical conferences, and sharing our innovations with our partners through licensing. As a result, we're experiencing significant demand for our technology from major industry leaders. This year alone, we signed multi-year deals with Micron and SkyWater. Our success is due to our talented team of engineers who are passionate about this effort, many of whom hold advanced degrees. This team has hundreds of years of semiconductor experience and deep technical backgrounds. In fact, if you search the internet, you'll find a list of the most prolific inventors in history. There are currently 211 people on this list, and you have to have a minimum of 300 issued patents to qualify. On it, you'll see names like Thomas Edison and George Westinghouse. Now, you won't see Nikola Tesla. He doesn't have enough patents. But you will find two of our current engineers, Drs. Belhaba and Cyprian Uzo. It's this kind of expertise that drives customers to us. Our customers include the providers of image sensors, RF components, memory, and logic devices, which are found in products ranging from CE devices such as smartphones, tablets, laptops, and gaming consoles, to automobiles and data centers. Demand for our technology has come in 3 waves. It started with the image sensor and RF segments, which represented a $36 billion market opportunity, quickly transitioned to the memory space, which expanded our addressable market by an additional $161 billion, and is now moving towards logic, adding another $150 billion market. Altogether, this is an approximate $350 billion addressable market. We see logic as a major growth opportunity, where our hybrid bonding technology, and specifically DBI Ultra, offers significantly enhanced performance at lower processing costs. It's also important to note that certain customers are only licensed under limited portions of our portfolio, to limited products, or for specific fields of use. The length of these agreements varies, as do royalty structures, and some include significant milestone-based payments. So there's future opportunity for additional revenue, even with current licensees. We generate revenue by offering our customers two partnership options. First, they can choose to take a license under the portions of our patent portfolio which relate to their interests. Or second, they can choose to engage in a technology transfer, which is structured to meet their specific needs, and also includes a patent license. The option they select depends upon the technology involved and where they are in their journey. Our long-term semiconductor goal is to create an annual recurring revenue base in excess of $100 million. We'll do this by promoting our technology throughout the industry, teaching our trusted partners how to implement our solutions, increasing our number of partners, and continuing to offer them new and innovative solutions that address their challenges, and expanding the size and scope of our patent portfolio. Our long-term success is predicated on continued adoption of our hybrid bonding and advanced processing node technologies, as well as key R&D efforts to enable expansion into additional high-growth markets. On a high level, our strategy entails 1. Executing in our core markets. We believe our hybrid bonding technology is a generational platform, which will be important for decades to come. So our goal is to expand our presence in each of the market sectors previously discussed and increase our IP revenue as those segments grow. 2. Successfully renewing our relationships with our existing partners. 3. Expanding our presence into adjacent technology and product areas such as AI, edge computing, RF modules, microdisplays, and optical interconnect modules. And 4. Entering new growth markets. As you can see, we're extremely excited about the future of our semiconductor business and are eager to start our new chapter as Adeia. Thank you for your time. I'll now turn our presentation over to Keith Jones, our Chief Financial Officer.
Thank you, Dana. Thank you, everyone, for joining us today. It is my pleasure to speak with you today about the exciting outlook for Adeia. While our name is new, it is built upon decades of innovation and financial success. Before we get into the numbers, let's discuss the underlying drivers that makes Adeia a unique and compelling value proposition. Our extensive patent portfolio is the foundation of our business. With over 9,500 patent assets, it reflects a history of being a pioneer in both the media and semiconductor industries. Over the years, we have successfully monetized these inventions through licensing of our technology to companies large and small, who in turn integrate them into their own product and service offerings. Over the course of the last 20 years, this has resulted in over $9 billion in revenue being generated from our IP portfolios. Being a pioneer and a champion for innovation has long been our core objective, and we continue to invest in order to capitalize on future market trends and technology advancements. As Mark mentioned, there is a proliferation in the use of video. It is pervasive in our everyday lives and continues to expand into social media applications, the automobile, the metaverse, and beyond. We believe capitalizing on this continued adoption will be a key growth driver for our revenue expansion. We also have a long and very successful history in the semiconductor industry. As Dana outlined, the pace at which the semiconductor technology has been able to advance has slowed significantly relative to Moore's Law. Our innovations allow for continuation of further advancements, which address the industry's specific challenges in the march toward deeper submicron nodes. Our financial model provides best-in-class operating results, producing significant operating margins and long-term cash flow generation. This is the engine of our focused capital allocation strategy that will drive long-term growth and maximize shareholder value. Looking forward, we are excited about the market opportunities that will be a catalyst for our future revenue growth. And looking at those growth opportunities, for media, the OTT market is rapidly growing, and we see tremendous opportunities to license our technologies to the providers of those platforms. For traditional pay TV, there are several large Canadian operators which are not under license today. These unlicensed Canadian operators offer us a very favorable growth opportunity. In semiconductor, we see an industry trend of using our hybrid bonding technology for both memory and logic semiconductors. We have seen great traction on the memory side, with approximately 90% of the DRAM memory and 60% of the NAND memory manufacturers under license. While in the early stages, we are now starting to see greater adoption on the logic SoC side at the more advanced submicron nodes. In addition to these areas, our R&D investments will create further opportunities that will help drive our revenue growth as we develop solutions that will expand offerings to currently untapped adjacent markets using media and semiconductors. A very important metric for us is our baseline revenue. Baseline revenue is driven by the recurring nature of our licensing agreements that provide a predictable revenue stream. Currently, our baseline revenue is $375 million, which constitutes the majority of our total annual revenue. Later, we will discuss how this baseline revenue is at the core of our operating leverage and provides strong long-term financial results for the company. As we mentioned earlier, emerging trends within media will offer significant revenue opportunities. This is a continuation of our dedication to innovation and finding solutions for emerging trends. Areas that will drive revenue in the future come from greenfield markets, including gaming and sports betting, ad tech, e-commerce, automotive, and audio streaming. All of these areas are indicative of major shifts in how we interact in our daily lives, as there is a greater introduction of video content in those offerings. Over time, we'll see a shift in our revenue mix, as these new media sources will be an ever-increasing percentage of our overall revenue. We continue to expect a decline in pay TV, which will be in line with the overall secular shift that has affected that industry. However, we anticipate that the growth in new media sources will more than offset such declines, resulting in growth in absolute dollars for our media IP portfolio. Now let's take a look at how our licensing business has performed recently. As you can see, for the trailing 12 months ending June 30th, 2022, we recognized approximately $440 million in revenue. Looking at the chart, you will see some fluctuations from period to period that is indicative of both our licensing models and our revenue recognition practices, which I'll add a bit more color to. In general, we enter into multi-year license agreements. On average, our license agreements are more than 5 years. This adds to the overall stability of the company, as well as being integral to the growth in the revenue baseline that I referred to earlier. Our revenue recognition is impacted by both the structure of our license agreements and whether the license is related to either our media or semiconductor portfolios. For example, fixed fee arrangements under our media IP licensing agreements are recognized on a straight line basis over the licensing term. This is due to the implicit need to provide ongoing innovation to our license portfolio for the continued functional use of the underlying applications. In other words, because of future performance obligations, we recognize this revenue over the licensing term. By contrast, fixed fee or minimum guarantee amounts under semiconductor IP licensing agreements are recognized entirely in the period in which the agreements are executed, because there are no future performance obligations for Adeia. As a result of this revenue recognition treatment, there will be fluctuations from period to period, and in some cases, the revenue recognized will be ahead of the amounts billed to our customers. Per unit or per subscriber IP royalty licenses are recognized over time based on when the related sale or usage activities take place. Our license agreements tend to be quite large and by their nature complex. As such, it can take extended periods of time to negotiate these agreements. A key objective to our overall growth is increasing the baseline revenue amount. That metric reflects overall gains we make in expanding our revenue profile. As you can see, we have been successful in growing this baseline over the past several years. Future growth in the overall revenue baseline will be driven by 1. Continued success of renewing agreements. We have been very successful in this area, renewing greater than 90% of our agreements. 2. Increases in our licensing base from the growth factors and market opportunities within both the media and semiconductor roadmaps. And 3. Pursuing licensing structures that are more consistent with the economics of both parties through aligning revenue measurements and the expected cash flows. This revenue base creates a recurring revenue stream, which provides financial stability and underpins the leverage in our financial model. Our operating margins are impressive by any measure. Our ability to monetize our IP portfolio and successfully scale the business with a disciplined and focused operating structure provides us with operating margins in the mid-60s. What I'd like to point out in this depiction is that the amounts presented reflect projected operating margins using our baseline revenue only. This depiction does not fully capture the increased margins and leverage opportunity of our business, as incremental revenue will have a dollar-for-dollar impact on our operating income. To expand into new markets and to drive revenue growth, we must continue to be innovators. As Paul mentioned, our goal is to increase our patent portfolio by 10% per year, principally driven by organic R&D. With that target, we are making investments in our future with focused R&D spending. This will be our long-term strategy. As such, we anticipate that our R&D spending will increase 10% each year. From an SG&A perspective, we see a more modest growth rate of approximately 3% year over year. This is reflective of disciplined expense management, as it will increase at a lower rate than our overall long-term revenue growth rates. Another component of our cost structure has been our litigation expense. While it is the goal that we amicably reach agreeable terms that are in the best interest of the company and its shareholders, there will be occasions where litigation, as a last resort, will be required to achieve that objective. In 2021 and 2022, our litigation expense has been at a low point, but we anticipate the overall expense doubling in the short term, back to a more normalized run rate. This expense will also fluctuate from period to period depending on our activities. One of our key objectives is to have a focused capital allocation strategy that both drives innovation for future revenue growth and to maximize shareholder value. Our overall strategy can be summarized in 4 primary initiatives. 1, organic investment. 2, strengthening our balance sheet. 3, return of capital to shareholders. And 4, strategic acquisitions. For organic investment, we are committed to expanding our IP portfolio through continued innovation. This will be a key objective which will drive future revenue growth. In strengthening our balance sheet, we will continue to prioritize reducing our overall debt that will remain with Adeia at the time of separation. I will talk about the characteristics of that debt a little later. The company has a long track record of returning capital to its shareholders. We plan to maintain the existing dividend practice which we are inheriting from Xperi, and we will continue to opportunistically buy back shares to reduce the outstanding float. M&A will be an important aspect of our growth strategy. We will be disciplined and focused in identifying opportunities, both big and small, that are adjacent to or complementary of our core offerings. Focusing on those opportunities that will accelerate our development roadmap or that can add to our overall portfolio to drive incremental revenue growth.
At the time of separation, Adeia will have between $75 and $100 million in cash on the balance sheet, and we will assume the existing term loan balance, which is expected to be approximately $760 million.
The term loan, which matures in 2028, is a variable interest rate loan at LIBOR plus 350 basis points. For the terms of the loan, there are mandatory payments and excess cash flow provisions based on our debt leverage ratios. The timing of the payments can greatly impact our overall cash position. As an example, we estimate that the annual excess cash payment due in Q1 2023 will be approximately $85 million based on our current forecast. While using a balanced approach with our other capital allocation objectives, we will look to accelerate paying down of our debt to reduce our overall leverage ratio and excess cash payment requirements. Additionally, we will explore financing alternatives in light of the market conditions. For our financial outlook on a standalone basis, for the full year 2022, we anticipate revenue will be between $425 and $450 million. We anticipate total non-GAAP operating costs and expenses to be between $140 and $150 million, resulting in a non-GAAP operating margin in the mid-60s. Long-term, over the next 5 years, we expect revenue to increase by a CAGR of 6% from our full year 2021 amount of $391 million. As part of our long-term objective to continue our innovation strategies, we anticipate total non-GAAP costs and operating expenses to increase by a CAGR of 6 to 8%. As a result, we see our long-term operating margins in the mid to high 60s. As you can see, there are exciting opportunities that lay ahead that will drive our revenue growth story. Coupled with the leverage that our operating model provides, Adeia is a unique and compelling story. With that, let me now turn it back to Paul.
Thank you, Keith. We appreciate your time today, and we hope you're as excited about the prospects for Adeia as a standalone company as we are. In review, I provided an overview of our winning licensing model, which builds on developing long-term relationships, our proven track record of renewals, and our best-in-class financial results. Mark gave us insights into how the pervasiveness of video, coupled with the expansion of our licensing portfolio, will lead to revenue growth. Dana spoke to the exciting opportunities in the semiconductor market, which will allow us to address the compelling technology challenges facing the industry. Keith provided insights on the compelling value proposition of our financial model that provides significant leverage as we grow our business. We look forward to sharing our progress with you in the future. On behalf of the entire management team, I would like to thank you for your interest in Adeia today, and we look forward to answering your questions.
Thank you for joining us for our live question and answer session at Adeia's 2022 investor presentation. Our question and answer session will last 30 minutes. For those of you joining us live stream, there is a form to ask questions. Those questions will alternate between the questions from our analysts. To begin, our first question comes from analyst Richard Shannon at Craig-Hallum. Richard?
Great, thank you guys. Maybe two questions, maybe a very simple one here just on the financials. I think you're talking about a goal of driving revenues to $500 million here, and using a 6% CAGR here, that would seem to get to that point within 4 to 5 years. Am I doing the math right, or is there other elements that would change that necessarily?
Sure, Richard, that's a great question, and certainly that's the goal that we've set out is $500 million over the next 5 years. And I think what's important to recognize is that's our annual revenue baseline, which we're currently at 375 for. And so we're focused on really growing that baseline. We think that's a really important metric for us. And so one thing to note, though, is that baseline might not always be a linear growth. You know, it will change over time. Some years we might see really significant growth given the nature of the deals that we do. So we have, you know, not a significant number of deals that we always get done in a year, but often they're really big, and that can really increase the the revenue baseline as we go forward in a significant way. And so what you'll see is as we get more confidence in that baseline and we have momentum to really move it up in a meaningful way, we'll do that and we'll report out on that. I don't know, Keith, would you add anything to that?
No, I think that's a really good summary. When you take a look at the numbers and the opportunity for us, it's just very exciting. You heard Mark talk about in terms of what are the opportunities from new media and OTT, and then with Dana, the semiconductor and kind of the reboot and the next generation, if you will. It really gives us really substance to grow that revenue. So you were spot on your math, and that is our goal, right? Ultimately, we have the opportunities to grow. We're going to execute on that, and that $500 million number is really real. We have a great pipeline that will support that.
Thank you, Richard. Our second question is actually from the audience, and the audience asks, what is fundamentally different about how you will approach the market as a separate company, and how does that impact your growth prospects?
Sure, thanks, Jill. I think our strategy will largely be similar to what we are today. We're going to focus on really what we're core at, media and semiconductor business. But we also have an opportunity to really invest in our business as well in a different way, with more focus on growing our patent portfolios, for example. We've set a goal of 10% growth year over year. And we think that growth in our patent portfolio will really drive to revenue growth over the long term, especially as you think about adjacent markets in the media space, gaming, sports gambling. We've got AR, VR that Mark talked about, metaverse. All of that stuff is really exciting for us as video expands, and those opportunities are there. But we have to invest in the business in order to really focus on that. So our strategy will really focus on what's our core asset, and that's our patent portfolio. And we think we can grow that 10% year over year based on what we've projected in terms of our expense run and everything else. So we're excited about that opportunity.
Thank you. We have another analyst online with our second question, Hamid Khorsand with BWS Financial. Hamid?
Hi. So my first question was going to be, are some of the customers in different semiconductor markets unlicensed because they can bypass your patents, or is it because you have yet to engage with them?
Sure, I'll start with this, and then Dana, you can expand on it. But really, as you think about licensing takes time, right? And so you have engagements with various customers over time that we're at different aspects of the pipeline of where we're at. Right, and so there's certain markets where we're also just seeing market adoption. Right, we're especially in our hybrid bonding portfolio and in our advanced processing node. Dana, you want to expand on that aspect of it?
Yeah, thank you. As far as the engagements are concerned, we are market focused. Okay, so we do look at, for example, the image sensor market. We do look at the logic market. We do look at the memory market, and I would say that we are actively engaged in discussions with all the major players in each of those spaces. But as Paul alluded to, we're talking about emerging technologies, and people are just at different points in their evaluation of our technology and what they want to do as far as their roadmaps are concerned.
Thank you. We have another question from the audience. The audience asks, having watched both the Xperi and Adeia presentations, it seems that a lot of Adeia's growth opportunities on the media side will involve seeking licenses from actual and potential Xperi partners and customers. Is that a fair assumption?
So, Jill, I don't think that's really a fair assumption in the sense that we really are focused on different aspects of the market. So I'll give pay TV as an example. Most of our pay TV customers are really the tier one, pay TV customers that really have their own, product offerings. And the Xperi product business is more focused on customers that might need their products, right? And so there's that natural bifurcation there. And so we don't see a lot of overlap. Now, where we've had channel conflicts, and one of the key benefits of the separation is allowing Adeia to really kind of expand into markets where there has been those channel conflicts, but they're not really customers of the Xperi product business per se. So we think that this separation really opens up opportunities rather than and takes away those conflicts far more than it would in the sense of it being an area where we continue to have overlap in our customers.
Thank you, Paul. Our next question comes to us from Nicholas Zengler at Stephens. Nicholas?
Yeah, hey guys. I was curious. I don't know if I missed it or not, but I was wondering how we should think about the revenue mix between IP revenue that serves the media segment versus the semiconductor segment, and is there a meaningful difference in the growth outlook if you look at it the two separately?
Sure, Keith, you want to handle this one?
No, great question. If you take a look at our revenue profile today, approximately 90+% of our revenue does come from media, and a little less than 10% from semiconductor. But really, when you take a look at the depth and breadth of our pipeline, it really gives us very similar growth opportunities. Now, what's really exciting is when we get into new media sources, we talked about that having a very accelerated growth rate that will more than exceed the declines that we're going to have in pay TV. So in totality, we see just a really great opportunity in the media side of things. And then Dana, as he pointed out in his presentation, we're really excited about with the emerging technology on the semiconductor side of our goal is ultimately get to be $100 million in revenue. So with that, those are just compelling and just very exciting opportunities. So that mix really is going to have a tremendous effect in bolstering our revenue.
Thank you for the question, Nicholas. Our next question is from the audience. Can you talk more about the motivation for the separation? Why will the two halves be worth more than the whole?
Sure. Great question, Jill. I think one of the core, focuses of this separation, we've been studying this for really years, is that, both businesses are pretty distinct, right? In both their profit margins and growth prospects, and really there's the how we go about licensing even, right? And there's channel conflicts that I mentioned earlier that we have to have taken into account. And so by separating the two businesses, we'll be able to focus on really what's core to us and the investments that we want to make in that business, and that management focus will be able to accelerate our growth. And on the Xperi side, they'll be able to do something similar where their growth will not be measured in the same way as really the Adeia business will. And so we think this management focus will really be able to accelerate growth for both parts of the business. And I think that's really one of the fundamental reasons for this. And so we're super excited about this opportunity and going forward on the Adeia side. And I know my colleagues on the Xperi side feel the same way on their side of the business.
Thank you. Up next, we have Richard Shannon from Craig-Hallum with a question. Richard?
Hi, great. If you don't mind, I'll ask two questions. First, I want to follow up on the prior question about the split of revenues. I think, Keith, you said the answer was about 90% media and 10% semis. And given that you said similar growth rates in both those sectors, I would assume that the investment from an R&D perspective is going to be largely that mix, or do you see the inorganic part of the growth coming disproportionately from one or the other?
In terms of allocating those resources, it really depends on some of the opportunities. So we're making some deeper investments on new media to kind of get into some of the green fields that we had talked about earlier. And then with the semiconductor, it's just kind of a layering effect, just to be ahead and really to assist that industry in terms of getting to the deeper technology and the next steps. So in terms of allocation, I don't think it's directly proportional in that regard. It's really us seeking those new opportunities and where we see opportunities to grow and then making a really committed investment to capitalize on it.
Yeah, I would just add, Richard, that one of the things that is different is Dana noted is we're trying to get into this next chapter of semi, right? And so there is some additional investment that we need there, especially in the hybrid bonding and advanced processing node, that to get to that $100 million revenue goal that we have. And then similarly on the media side, right, we've got a very established business for the most part of it, primarily in pay TV, but also in OTT, and we've had some success in social media as well. And so from there, we're really focused our R&D efforts as well as obviously keeping that part of the business going, but looking into those adjacent markets. And so those R&D dollars are going to really be dependent on those growth aspects as well. So it won't be that exact match from a revenue standpoint, if that makes sense.
Okay, that helps. And maybe my follow-on question, primarily for Paul, is one of the struggles with Xperi's stock in the old Tessera was visibility into the revenue stream here. And obviously, I like the fact you're going to continue to communicate a baseline revenue stream here. But ultimately, that visibility seems to be an issue with a lot of investors. So are you taking any sort of new a new approach to communicating or giving visibility to this? Or do you see more of a benefit here of an expanded and diversified portfolio across both semis and media that will kind of average out those large licensing opportunities that's created, perceived risk from investors in the past?
Yeah, great question, Richard. I think the focus, for us and why we feel really good about the baseline revenue is that media part of the business. It really creates a substantial portion of that. And the pipeline opportunities are more diverse because of that. And then as semi continues to go into its next chapter there, we believe we can start building that up in a similar way that the media business has. And so that, as we look out and forecast, from a revenue standpoint, we are going to be focused on that annual, revenue baseline. And a large, what gives Keith and I confidence in that number more than anything else is our track record of renewals, right? So we do long-term deals, over 5 years on average, right? And we have an incredible track record of renewals. We're in excess of 90%, and we are, and that is just driven by our constant innovation really in that media space. And so when you talk about visibility and our confidence in that visibility, it really is driven by those factors. It's very different than just having a semi business where really at that time, Richard, we had 3 or 4 kind of big customers, right? And so the diversity of our customer base was not nearly what it is now. And so I think that gives us the ability to kind of continue to communicate in a way that provides confidence in that baseline revenue and growing that baseline revenue. And then we have opportunities beyond that as well. Keith, would you add anything to that?
I think those are all great points. I think one of the things that's really the beauty of our business is Paul talked about that we enter into long-term contracts. So that 375, in my mind, my perspective, is a recurring revenue model. So when we talk about visibility into the future, and we talked about the operating margins that we have, now keep in mind that operating margin was just based off of the $375 million baseline. So it's exciting because everything above that is really going to be incremental contribution to us as a company. Now, as our businesses grow, we'll add to that revenue baseline. Also in the semi side, one of the things that I talked about is just kind of working on the contract structures with our licensees where the economics are lined up. We see volatility, particularly when we sign the Micron deal, and you see a little bit of a peak. But ultimately, we think we can structure things in a way that is just much more consistent, and we're recognizing revenue that's going to be commensurate with the economics of the deal over time. So with that, it's very exciting. We have visibility more than most, quite frankly.
Thank you for your questions. Up next, we have a question from the audience. The audience is asking, how much weight is the metaverse being given in identifying growth opportunities, and where does VR fit into the mix?
Mark, you want to take this one?
Yeah, absolutely. Thank you for that. So metaverse is just one of the many areas that we're innovating in, but it is a very important area, to be perfectly honest, and it is a testament to the fact of the proliferation of video technology, which is bringing us our portfolio along in that regard, and it's an opportunity for us going forward for sure. With regard to augmented reality and virtual reality technology, again, we're already benefiting from that. We have a number of licenses in social media and imaging space that are applicable, and we see that continuing to move forward as well. And then more importantly, from an innovation engine perspective, we've built a strong team that are innovating readily in that space, and we look forward to benefit from those innovations in years to come.
Yeah, and I think I would just add, Mark, one of the things when we talk about that 10% portfolio growth, it's going to be focused in these areas and other emerging markets, right? Because this is what our team is so good at, is identifying those emerging markets and innovating in those spaces. Because that's what our inventors and engineers are there to do. That's their sole focus, right? Is to think about those ideas and invent in that space what's coming. So obviously metaverse is a big trend. We all hear about it. And we're excited about being able to invent in that space and help our customers down the line make their products better.
Thank you. Up next, we have on the phone Nicholas Zangler from Stephens with a question. Nicholas?
Yeah. Hey guys, the audience stole my metaverse question, but no. I've got two more if you don't mind.
Absolutely.
The first one, I'm curious, after the spin, is Xperi going to be a customer of Adeia? And if so, I'm just curious, what percentage of the revenues that would represent?
Yeah, thanks, Nicholas, for that question. Yeah, Adeia, we've put into place agreements already. As part of the separation, we filed them as part of the Form 10, including a cross-business license agreement, where broadly speaking, though, there's not like revenue coming in from the Xperi business. They're not a customer. We've already kind of taken care of that as part of the separation, and so there's a license agreement. There was a split of patents. There's a separation and distribution agreement. All of those things took into effect. How do we separate? And so there's not expected to be any sort of meaningful revenue coming from the Xperi product business.
Got it. And then, just in general, Adeia has historically served, linear TV and new media TV. And as the market continues to shift to CTV, if I were to think of this conversion as, a linear TV viewer effectively becomes a CTV viewer, does this transition represent a meaningful benefit for Adeia? So I guess said another way, is the CTV environment significantly more lucrative for you than the traditional linear TV environment?
Yeah, I'll let Mark expand on this, but certainly Adeia is focused on really, how do we play in that transition, right? And so our innovations have been thinking about, now it's a different market with different, ARPUs and the like, and so we have to take that into account. But certainly our innovations have been focused on that transition, and we've had success in licensing in that space as well. Consumer electronics, social media have all been part of our licensing efforts and success, and we expect to continue to expand in that area. Mark, would you add anything to that?
Yeah, I think that represents the connected TV space represents an opportunity for enhancements in our pricing models, and more importantly, creates an opportunity to bring in advertising-based revenues and such. And so again, I think there's an upside in that regard.
Thank you. We have another audience question. The audience is asking, can you elaborate on what you mean by rebuild of the semi business?
Yeah. Thank you. I know that in previous materials we've referred to it as rebuilding the semiconductor business. However, to be honest with you, I do not think of it that way. I think of it as writing our next chapter. If you go back to the presentation materials that we gave, I told you that historically we focused on advanced packaging technology. But as we looked around the industry, we realized that the fundamental challenge out there was the Moore's Law issue, which is a very real issue. And if we wanted to continue to be relevant and provide value to our shareholders and to our customers, we had to address technologies that dealt with that issue, which is why we talk about hybrid bonding and advanced processing nodes. So from my perspective, it's about looking ahead to what's coming next, moving forward, and advancing the industry.
Thank you, Dana. Our next question is another audience question, and the audience is asking, what is the historical return on capital for acquired patents, and what is the expected timeline of new patents to become revenue generators?
Great question, Jill. Or from the audience. Thank you, audience, for your wonderful questions today. I think when we think about our portfolio and the way we license, we don't really break it up in terms of acquired patents and inorganic, or organic patents that we develop internally, because we license on a portfolio-wide basis. Now, do we, look for acquisitions that really can augment our portfolio? Absolutely, and we're really good at that. That's one of our core competencies. But 85% of our portfolio is developed internally, and we license that, the entire portfolio or the entire media portfolio or the entire semi portfolio to our customers. And so we really don't break it down in that, per patent by patent basis, because we're providing people with access to, 6,000 patent assets or, 2,700 patent assets on the semi side, right? Because we really license in that way, and that's how we think about it. In terms of, invention to monetization as well, one of the things that's really important to our licensees and our customer base is the fact that we continue to innovate, right? And so sometimes those early innovations are helpful in driving those discussions, because we're able to say, this is what we're focused on moving forward. This is how you'll be able to benefit from those early inventions as you take a long-term deal. As Keith mentioned, 5+ year deals, sometimes even longer. We're going to be innovating during that entire time period of that license agreement. And so we're able to have those conversations. And so certainly, if you're talking about the adoption cycle, right, on a patent and innovation, that can take time, right? That can, an idea to getting to a patent to then having it in the marketplace can sometimes take, upwards of 10 years, right? Or sometimes even longer. But our focus is on continuing to innovate in that space, because we think that's going to be valuable to our customers going forward as we think about what's important to them.
Thank you. Our next question comes from the audience. Can you discuss Canadian pay TV opportunities and how this will drive baseline revenue?
Sure. Canadian pay TV is one of the core areas that we've said is a growth potential for us. We currently have licensed a number of the Canadian pay TV operators, and we're really proud of that success. But we've also had to unfortunately litigate, against 3 of the operators that are out there. And litigation we always view as a last resort, but sometimes it's a necessary part of our business in terms of driving to get to an understanding between us and the other party of what the value of our portfolio is. And so, when you look at that opportunity out there for those unlicensed Canadian pay TV operators, we think it's tens of millions of dollars annually, over a period of time, right? And so, it'll take us some time to get there. It often does, but we still think the ultimate opportunity on a run rate basis is still very exciting for us.
Thank you. Our next question is also from the audience, and they are asking, what do you expect free cash flow to be in fiscal year 22 and fiscal year 23?
No, great question. Once again, you're picking up on the beauty of our business model in terms of the leverage. So, fundamentally, you're going to think about that we generate, in terms of the guidance, the midpoint is about $437 million in revenue. I talked about being 65% kind of operating margins. And fundamentally, that yields in the mid to high 2s in terms of cash from operations. We do expect a similar profile in 2023. We'll give a little bit more color on that. But it is those numbers that we're talking about on those revenues, it's just absolutely tremendous. So, with that ties back into our capital allocation strategy in terms of what we do with that. So investing organically to grow our R&D, paying down the debt. It gives us a sizable opportunity to do that and pay down the debt sooner than the maturity date. And then also return of capital to shareholders through dividends and repurchase of stock. But last but not least is we're acquisitive. So we are looked to grow our portfolio, our revenue opportunities for seeking strategically smart opportunities that fit our business model.
Thank you, Keith. Our next question is also from the audience, and the audience is asking, how much time is left on your hybrid bonding and advanced processing node technology patents?
Thank you for that question. I think there's a couple points I'd like to make with regard to that question. The first has to do with the life of the patent portfolio itself. So for issued patents with hybrid bonding, our current assets extends well into the 2040s. For advanced processing nodes, they extend into the 2030s. But if you also go back to my presentation and look back at the slide on the patent applications, you will see that about 80% of our patent portfolio right now is directed towards those 2 technologies. So there's considerable life left in the portfolios. The second point I want to make here is we are more than patents, okay? we are also about know-how. People come to us and work with us because we help accelerate their technology roadmaps. If you think about hybrid bonding, for example, it may take 2, 3, 4, 5 years for them to actually adopt that technology and get it to work right. Many times, we can cut that down into half that amount of time. Okay, so it's a significant value proposition that we offer. So it's not about, so much, when you think about the value proposition, they gain, right, because they enter the market faster, and they also save money on the R&D process.
Thank you. And our last question is coming from the analyst Hamid Khorsand from BWS Financial. Hamid?
Thank you. So my question was, could you just talk about your comfort level with your leverage ratio and, Wardy said it was acquisitive. So I guess, what are you looking at from a target standpoint? Would it be something small or would you do something large? And how would you, go about balancing that with, paying down debt?
No, great question. Paying down debt is really a big priority for us. So once again, the beauty and the leverage of our model is that we have significant cash flows. So that will be a priority. And once again, to pay it down sooner than the maturity date, as well as look for opportunities to refinance as the market conditions and pricing improves. In terms of M&A, there's a lot of opportunities out there. So we'll look for things that are big, small, whole companies and pieces of companies as well. It's just a matter of really what that fits into our overall narrative and our opportunity to either accelerate our roadmap or drive incremental revenue from our base. Yeah.
Thank you. And now I'd like to ask Paul for any final closing comments.
Thank you, Jill. And on behalf of the entire management team, I want to thank all of you for your interest in Adeia today. It's been a pleasure being able to speak to all of you, and we look forward to updating you on our progress as we move forward. Thank you.
And that concludes our live question and answer session, and that concludes our presentation for the day. Please, as a reminder, feel free to visit the Investor Relations website to view a replay and download all of today's presentation materials. Thank you again.